Hello friends, today we will be doing revision of chapter called Securitization Trust. It is chapter 12EA of the Income Tax Act. Three sections ideally. Section 115 TCA is the main section. In the previous chapter, Business Trust and Investment Fund, the main sections were 115 UA for Business Trust. For Investment Fund, it was 115 UB, and for this chapter, it is 115 TCA. Exempt section, some incomes will be exempt. 1023 DA. Now here entire income of securitization trust will be exempt under 1023 DA. Therefore, anything and everything passed on by securitization trust to unit holder, that is investor, in the hands of investor, everything will be taxable. Here also pass-through status will be applicable, but unlike business trust and investment fund, where some incomes were taxable for business trust or investment fund and were exempt for unit holder, and vice versa. Here it will not be like that. Here everything is exempt for securitization trust and everything will be taxable for unit holder. For securitization trust it is exempt, therefore tax rate do not come up in the picture, and for unit holder or the investor it will be taxable as per normal rate, slab rate, or whatever is the rate applicable. TDS will be deductible under section 194 LBC by securitization trust while making payment to investors. What is securitization trust? Let us first understand. All the three, business trust, investment fund and securitization trust, they work on the same principle, that is principle of collective investment. They collect money from people like me and you, the way mutual funds collect, and they invest. Where do they invest? So mutual funds will invest in stock market after collecting money from us. Business trust, they will invest in real estate assets or infrastructure projects. Investment funds will be investing in startup companies. These people invest in stressed assets. They collect money from us, we invest, they will issue us something called securities. We will not be called as unit holder, we will be called as investor. And our money they will invest in, not in startups, not in infra projects or business trust. They will invest in stressed assets. Stressed assets means loans given by banks, NBFCs, which they are not able to recover fully. For example, Punjab National Bank has given loan of 10,000 crore to Nirav Modi, not able to recover back. Then somebody will come forward and show interest. The way you have bills of exchange in inter-CA accounts, same way here you have concept of securitization. Securitization means securing the recovery, whereby investments will be made in the stressed assets. Whatever assets are non-recoverable, they will purchase. For example, Punjab National Bank has to recover 10,000 crore. These people will give offer to Punjab National Bank that are you ready to sell it to us for 3,000 crore? We will pay you 3,000 crore. Punjab National Bank is finding it impossible to recover anything. So they will sell it off for 3,000 crore. That's something better than nothing. And these people will purchase for 3,000 crore with an intention that by paying 3,000 crore, we will be able to recover at least 4,000 crore from Mehul Choksi, Nirav Modi, etc. So for example, Sundaram Finance Limited, which is one of the NBFC. Now this NBFC has given various loans to different people. Loan to Mr. X, Mr. Y, Mr. Z. Somebody has taken personal loan, somebody has taken housing loan, somebody has taken vehicle loan. Now, Sundaram Finance is unable to recover anything from these people. Whatever they could recover, they recovered. Balance amount, they finding it impossible to recover. So what they will do? They will approach some professional people, or they will themselves set up investment fund, or they will set up securitization trust. Now, securitization trust is governed by RBI also. It is governed by SEBI also, and it is governed by the act called SARFAESI Act. Have you heard the name SARFAESI? SARFAESI is securitization and reconstruction of financial assets and enforcement of securities interest. So what will happen? They will approach professional people. Professional people here are IDBI Trusteeship Limited, which is pioneer in this field. This can be done. There are multiple number of people in this industry. IDBI Trusteeship will create one special securitization trust, which will be special purpose vehicle. Special purpose vehicle means somebody who's created to achieve a particular target, or it is set up or created for particular special purpose. Once that purpose is achieved, this entity will be shut down. IDBI trusteeship will charge professional fees from Sundaram Finance, create securitization trust by giving it some name. Then securitization trust will approach public, mutual fund, banks, will ask people to invest. These people will be called as investor. It could be general public, like person like you and me, banks, mutual fund, NBFCs, finance companies. Anybody can invest. People are free to invest. Okay, then whatever funds are collected by securitization trust, those funds will be utilized to take over the stressed assets from Sundaram Finance. Stressed assets means assets where recovery is not possible or recovery is expected to be very negligible. Sundar Securitization Trust will hand over 3000 crore to Sundaram Finance, and then Sundaram Finance will be out of the picture. Now, whosoever has taken loan has to recover Sundar Securitization Trust. Now, after collecting funds from us, they will issue to us, means Securitization Trust will issue to us some document. If you are investing in shares of some company, company will allot us share certificate. If you purchase debentures, they will issue debenture certificate. If you invest in mutual fund, business trust, investment fund, they will issue units. But securitization trust, they will issue some document which is called by 3 different names by 3 different bodies controlling them. Who controls them? RBI, SEBI and SARFAESI. SARFAESI is not an authority, it is an act. SEBI is a law also, SEBI Act 1992 plus it's a body also. RBI is RBI Act 1949 plus RBI is a body also. SARFAESI is just an act. Under these 3 acts, under RBI Act, it is called as securities. The document which securitization trust will issue to us, in RBI language it is called securities. In SEBI language it is known by a very big name, Securitized Debt Instrument SDI, and in SARFAESI language it is called securities receipt. These 3 wordings you need not remember, it is just for the sake of your knowledge. You should be sounded off with these 3 terminologies. So in exam, if any of the 3 terms are used, you should not have a question mark on your face, you should not get blank. Okay, now they will collect funds from us and they will issue us securities. Now what? Now after collecting funds, they will invest in this 3000 crore and then they will earn income. How income will be generated? Income will be earned only by way of interest and income will be generated by way of recovery. Instead of 3000 crore, they are able to recover, let's say 3100 crore, then 100 crore is a profit. That income will be totally exempt under section 1023DA in the hands of securitization trust. For themselves, income is exempt, but when that income is passed on to people like you and me, when it is passed on to investors will be taxed. Investors will be taxable as per regular rate applicable to them. If it is general public, individual, then slab rate, company then 30%, 25%, 22% rate, bank then normal rate, etc. Mutual fund, then income could be exempt. Okay, income earned by Sundar Securitization Trust will be entirely be exempt for them, but when that income is passed on to investors, for investor it will be taxable. RBI calls it as securities, SEBI calls it by the name of Securitized Debt Instrument SDI, and under SARFAESI it is called by the name of Securities Receipt. And this entity which is created, Securitization Trust, RBI calls it as Special Purpose Vehicle SPV, SEBI calls it as Special Purpose Distinct Entity, and SARFAESI Act it is called as Trust. Technically chapter is over. Last thing which is left is TDS. TDS under section 194 LBC. Who will deduct TDS? So first of all, understand securitization trust is the first person who has earned the income. For them, entire income is exempt under whatever head may it be. When they pass on that income to us, that is investors, in our hands it is taxable as per regular rate. Here on this income, TDS will be deducted by securitization trust under section 194 LBC. Business trust it was 194 LBA, investment fund 194 LBB, securitization trust 194 LBC. At what rate? Then it depends upon residential status of payee, residential status of investor. If non-resident or a foreign company, then as per rate in force. Rate in force means if it is foreign company, then it was 40%, now it will be 35%. And if it is other non-resident, then tax rate will be, TDS rate will be 30%. Of course, 30 or 35 will have to be increased further by applicable rate of surcharge, health and education cess, wherever applicable. DTAA rates not to be brought into picture. These are the rates for TDS. TDS rates are given in Finance Act. Actual rate of tax applicable may be different, but TDS will be at so and so rates, especially for non-resident other than foreign company. Whether tax rate applicable could be slab rate under old scheme or under new tax regime or as per DTAA, but TDS will be at 30% flat rate plus surcharge plus health and education cess. And in case if investor is resident, then TDS will be again depending upon whether is individual HUF or other than individual HUF. If resident unit holder or resident investor is individual HUF, then the TDS rate will be 25% without surcharge, without health and education cess. If it is other than individual HUF, then 30% flat. No surcharge, no health and education cess. Resident, then individual HUF 25%, other than individual HUF 30%. Non-resident or a foreign company, then 30 or 35%. However, the chapter doesn't end here. Okay, this is the crux of the chapter. In case you want to take a screenshot of this, you can do the needful. It is included also in your notes, but if better you take a screenshot. Now, main section is 115 TCA. So, out of 3 divisions of this chapter, 1023 DA is done by us. Entire income will be exempt. 194 LBC, entire income will be subjected to TDS. This also is done by us. The main section is 115 TCA. 115 TCA has got 5 subsections. Subsection 1 and subsection 2 both are on pass-through status. Pass-through status with regards to investment, saying that whatever investment we people make, investors make in the securitization trust, and then securitization trust will make investment, the securitization trust will be deemed to be not existing in this world, will be deemed to be pass through, will be deemed to be see through, will be like a glass, will not be seen as if it does not exist, as if investment made by you will be deemed to have been made in the target investment directly without the help of investor, without the help of securitization trust. With regards to investment, then pass through status with regards to income. Investment, income. Whatever investment securitization trust has made with your money, it will be deemed that you only made that investment directly. And whatever income is earned by securitization trust and passed on to you, it will be deemed as if that investment income, that income was earned by you directly without investment fund. Both of them are unimportant once you understand pass-through status is applicable. Mainly will be with regards to nature of income and proportion of income. If they have 70% PGBP income, then whatever is passed on to you, in your hand also 70% of whatever you have received will be PGBP income. Subsection 3, deem credit on 31st March, exactly same as investment fund. In investment fund chapter, it was section 115 UB subsection 6. Here it is 115 TCA subsection 3. If income is not credited or not actually paid by securitization trust to the investor till the year ending, then that much income proportionately will be deemed to have been credited by securitization trust to the account of investor as on 31st March of the financial year. On 31st March, last day of the financial year. However, later on subsection 5 says no double taxation, means once the income is deemed to be credited without actually crediting, then later on it will not be taxed once again in the hands of investor in the year in which it is actually distributed, because it is already taxed. Okay, deemed credit concept is there for investment fund and for securitization trust. There is no deemed credit concept for business trust chapter. And then subsection 4, how will you come to know as an investor how much income is PGBP, how much is capital gain? So, securitization trust will have to furnish a statement after the year ending. One copy of statement they will have to furnish to investor and one copy of statement to income tax department. To investor, they will have to furnish in form number 64F, and to department they will have to furnish it in form number 64E. 64F will have to be furnished by 30th June of the next financial year, that is after March year ending, April to March. March was April, May, June, within 3 months from the year ending. Neither you are required to remember form number nor are you required to remember the date, but you are required to remember that there is some concept of statement furnishing. That is how at the year ending, unit holder or the investor will come to know that this is the income going to be taxable for him. Subsection 5 we are done with. That's it. And the TDS provision also we are done with. So TCS subsection 1 pass through status with regards to investment. Again subsection 2 pass through status with regards to income, that income in the hands of unit holder or security holder or investor will be in the same nature and same proportion. Deemed credit 31st March, last day of the previous year. Statement furnishing, 1 copy to investor, 1 copy to prescribed income tax authority. Form 64E to department and Form 64F to investor by 30th June, not to be remembered. And then 115 TCS subsection 5, no double taxation if already taxed. Same concept was there for investment fund also. And entire income of securitization trust will be exempt under 1023DA. Investors' income were also exempt under 1035A, but that was deleted long back. So now that you need not study, you need not keep it in your mind. Okay, 194 LBC, TDS on entire income, whatever income is distributed, irrespective of the nature of income, same flat rate, income distributed by securitization trust to investor will be subjected to TDS. If the payee investor is resident individual HUF, then 25%, other than individual HUF, then 30%. But if non-resident or foreign company, then at the rate in force, and rate in force would mean 35% if foreign company or 30% in case if it is other non-resident. Nature of payment, so answer any income distributed by securitization trust to investor. With that, the chapter investment fund, securitization trust, business trust, all three are over. Let's have a brief comparison between 3 chapters briefly in 2 minutes. If you can see it on the screen. First is associate entity, business trust, investment fund, securitization trust. I call it as BIS, business trust, investment fund, securitization trust. The chapter number is chapter 12 FA, FB, and here chapter 12 EA. The main section is 115 UA, 115 UB, and for this chapter 115 TCA. The TDS section, last column, TDS section are under 194 LBA, LBB, LBC, which are easy to remember. They are going in a series. Okay, and then even in alphabetical order also, B comes first, business trust B comes first, then comes I, then comes S. So 194 LBA, LBB, LBC, easy to remember. However, only in last chapter everything is exempt for securitization trust and nothing exempt for unit holder, everything taxable for unit holder. For remaining chapters, some income for business trust and investment fund, some incomes are taxable for business trust or investment fund, and that much will be exempt for unit holder, and some incomes which are exempt for business trust or unit holder will be taxable in the hands of unit holder. So the table will be here. What table will be prepared? Table will be exempt for business investment fund, then taxable for unit holder. Taxable for investment fund or business trust, then exempt for unit holder. ET. Okay, and then TDS will be deductible from that income which is going to be taxable for investor or the unit holder under 194 LBA or LBC. Okay, now one more thing I would like to bring to your notice, the concept of deemed credit. I have not prepared any separate column for this. Deemed credit on 31st March concept is applicable to the last 2 entities. Deemed credit on 31st March. On whom is it applicable? Not concept, not applicable for business trust, applicable for investment fund and applicable for securitization trust. And at both the places it is mentioned, here it is 115 UB subsection 6 and here it is applicable, it is governed by 115 TCA subsection 3. Then there is a clarification that once taxed under deemed credit concept, same thing should not be taxed once again when it is actually distributed. That's it. With that, all the 3 chapters revision is over. Thank you very much. See you in the next video with the new chapter.